Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shereen Bhan. Well, it is that time of the year when we ring in the festivities, and Diwali in particular symbolises the victory of over inertia and the start of a new cycle with the light of clarity and positivity. It wouldn't be wrong to say the Indian startup ecosystem has rounded off a cycle of its own, hitting the concrete hard from the record-breaking highs of 2021, followed by a bitter correction over the last 2 years to now finally emerging with a sense of sturdiness and signs of spring. 2024 is set to become the best year for startup IPOs since 2021, when Zomato, Paytm, Nykaa and others raced to Dalal Street as flag bearers. So far this year, we've seen the likes of Ola Electric, FirstCry, Digit, Ixigo, Unicommerce Awfis starting their public market journeys. More are on the way, with Swiggy, MobiKwik, BlackBuck and Ecom Express set to get their fireworks going, with plans to list before the year closes. Now, if we assess the venture capital funding data for the 9 months so far in 2024, it's been better than 2023, with $9 billion having come into the ecosystem, a tad bit more than what the Chinese market has received. This as per data from Traction. We've seen 6 unicorns take flight in 2024 compared to just 2 last year, and that's come on the back of large deals returning with as many as 12 funding rounds valued at more than $100 million each. Besides the big highlight of Zepto's $1 billion fundraise in 2024, it's the secondary share sales that have fueled $100 million rounds in the Indian startup ecosystem. The strong IPO lineup and the emergence of secondaries have offered much-needed mode of exit for early investors, challenging the long-held notion of Indian startups being trapdoors for funders. Sectorally, the AI hype is flatboarding. India's quick commerce players have turned into global outliers, albeit with some regulatory noise that has also plagued the fintech sector. So what does 2025 have in store for India's startups? Before I get into that, let me start by wishing all our viewers a very happy Diwali. And it's time now to welcome our guests on the show, Karthik Reddy, the co-founder and partner of Blume Ventures, and Hemant Mohapatra, the partner at Lightspeed India. Karthik and Hemant, thanks very much for joining us on this special edition of Young Turks. A very happy Diwali in advance to the two of you as well. Karthik, you know, I gave a very brief but a quick snapshot of what the year has held out as far as India's startup ecosystem is concerned. Let's dive deeper into some of those headlines. What, to your mind, Karthik, and I'll start with you, has been the biggest takeaway of 2024 for India's startups so far?
I think definitely the path to liquidity cycles being, predominantly the IPO sort of, journey and the route has become very clear that India will have to pursue that. If you have a domestic company that's actually trying to build value within the boundaries of this country, eventually whether someone's acquiring it, someone's trying to buy a secondary in a unicorn, or whether someone actually thinks this is a sustainable business, they all approximately look the same. If you ask a private equity player to come and buy into a large digital company, they want to know whether it makes money, whether it's going to get to EBITDA, not right away, but in 2-3 years. And I think they were more adventurous in 21, 22. They've gone back into the same mode of judging a company as if it were IPO ready. And so I think the learning for at least the Indian lot that where we're building for the market opportunity that is India is that you have to build within the constraints of what the profit pool in India demonstrates, and then you're judged by the public markets relative to what else is out there. So if you're Mama Earth, then it's Unilever and Marico. If it is Paytm, then it is an NBFC or a bank, and so on and so forth. So I think it's great that we have that momentum now building up. If we end the year with 12 to 15 IPOs, and we can keep this momentum going for the rest of the decade, suddenly we'll have 100+ companies listed across small, mid, and large cap in Indian tech. And I think that'll be a watershed moment to welcome the next decade. I know I'm talking very far out, but I feel what we started this year is it's going to become a consistent trend line over the rest of the decade.
Hemant, let me ask you, to Karthik's point, what would you signify as the big takeaway for the Indian startup ecosystem in 2024, outside of the fact that we've seen this spate of IPOs? And I think it would have been unimaginable even a couple of years ago that India would have been the IPO nation versus the US market, for instance.
Yeah, and absolutely. Thank you again for having me here, Shereen, and good to see you, Karthik. Always a pleasure. Look, I think Karthik is absolutely right. When capital was easy to raise, and easy to deploy, there was a glut of capital around the world. Now that it is harder to raise capital and deploy capital, there's a flight to quality in all dimensions of our business. There's a flight to quality in businesses and business models, teams, and even investors. So we are seeing that happen across all the geographies Lightspeed operates in. So that is a theme you're seeing in the capital markets globally. From a thematic perspective, and I would say AI is looming large in every single category out there. We are seeing AI leading to a resurgence of consumer tech, and I know consumer tech has gone through a bunch of ups and downs over the last few years, but now there is a wave of new consumer tech companies, new modalities, new behaviors that AI is enabling, that is making it a very interesting category for us to invest in. We've done a bunch of those this year. We're also seeing a resurgence of hard to build companies, hard to build technologies. And you can call it deep tech, you can call it frontier tech, you can call it infrastructure tech and software. But we are starting to see a lot of net new companies coming up and attracting a lot of high quality capital that are building hard to solve problems globally, especially coming out of India as well, which is a net new thing for us and is a theme that we are digging in a lot more now.
Give us examples of the kinds of companies that you've invested in and what those check sizes look like at this point in time.
Yeah, so as a fund, we have been pretty active in what you could call frontier tech and deep tech. But maybe just zooming out from there are companies that are hard to build in different ways. We are investors in a company called Zepto that is hard to build in a very different, operationally intensive way and requires a lot of capital to prove a business model out. And then we have companies like Pixel Space that needs to get heads down for 3 to 4 years in the lab and prove the science and the engineering risk behind their approach before they come out in the market to raise more and more money. So we have looked at both of these categories, and like I said before, the capital is now flying towards companies that have built businesses of high quality, whether they are operationally intensive and require a ton of capital to prove the business model out. They are attracting a lot more capital now once they have gone through that needle hole. And companies like Pixel Space that have actually spent 3 to 4 years building world-class, de novo, net new to the world technologies, and now they are kind of reaching commercialization stage. They've also gone out and raised a lot of capital globally. So we are seeing a bit of both happen in the India market.
That's been the story. But Karthik, let's just pick up on this quick commerce story, because we spoke about this, including at the India Business Leader Awards jury, which you were a part of. And the point is not just that these are companies that are trying to do something that's hard to build. The disruption that these companies are creating across different sectors, the fulfillment expectation that these companies have managed to change, whether it's Zepto or Blinkit, and now more and more companies are getting into the fray. Do you believe that this quick commerce story is going to be the clear India outlier for the next decade?
I think it definitely rewrites a lot of rules, right? Unfortunately, our early pick in this space, Dunzo, became a victim of this, little bit of a capital bloodbath and fell behind, sadly. But, we were believers that the delivery model required disruption, and it required rethinking in a market like India, where you don't have big format retail like you did in other markets, and you have high density in almost 20, 30, 40, 50 cities, and which is where the biggest part of Indian consumption is concentrated. It's not, by the way, we are also contrarians, in the sense that we don't think quick commerce, for example, will work in tier 3, tier 4 India, and we actually have 3 to 4 retail or supply chain bets into tier 3, tier 4, which we started 2 to 3 years back. So we're always, as guys who do early stage, we have to be ahead of the frontier. I'm commenting on something that all of you are aware of now when it comes to quick commerce. What I'm seeing, though, to your point, is it is forcing both D2C brands, conventional retail, conventional FMCG, to rethink business models. And then every time that happens, just as AI is doing in the polar extreme of technology, this is more around logistics and supply chain, it's forcing people to rethink how to rebuild supply chains. And if you actually build a picks and shovels business that fuels, an acceleration to this business model, you could build a very, very valuable company. So now we're seeing plans around, dark warehouses on the cloud. We're seeing, how do you get, we are beneficiaries by way of Yulu and Battery Smart, which are actually supply to the quick commerce model. So the picks and shovels businesses are beginning to pick, right? The logistics businesses have to be rewritten. I don't know what delivery will do, and I don't know what Ecom Express will do to be able to, shift their model to be able to compete with these guys. Similarly, as you're seeing, Flipkart and Big Basket are all forced to compete. Let's see if Reliance and DMart also get into that.